Good morning. Wall Street traders sent stocks to all-time highs on Tuesday on speculation that solid corporate earnings will keep powering share market gains. The US dollar slid to an almost four-year low. Gold held above $5,000 an ounce. The benchmark S&P 500 index notched a record closing high and extended gains for a fifth session as investors sifted through a slew of mixed earnings, while a Medicare Advantage payment proposal from the Trump administration sent health insurers sharply lower. At the close of trade on Wall Street, the Dow Jones index fell by 409 points or 0.8%, but the S&P 500 index gained 28 points or 0.4%, and the tech-heavy Nasdaq index added 216 points or 0.9%. The S&P 500 now hovers about 20 points shy of the 7,000-point milestone, a mark that analysts have pegged as a potential pocket of technical resistance. Meanwhile, the Nasdaq touched a near three-month high as earnings took centre stage. Economic bellwether United Parcel Service projected higher revenue for 2026 and rose 0.2%. Peer FedEx added 2.6%. Results from parcel carriers are often used as a key barometer to gauge US economic health. Boeing swung to a fourth quarter profit but dipped 1.6%, while General Motors advanced 8.8% after reporting higher fourth quarter core profit. In airlines, American Airlines slumped 7% despite issuing a 2026 profit forecast that topped estimates. JetBlue dropped 6.9% on a wider than expected quarterly loss. The broader S&P 500 information technology sector rose 1.4% as Corning jumped 15.5% to its highest level since 2000. The Gorilla Glass maker signed a deal with Meta worth up to $6 billion for fiber optic cables in AI data centers. Most tech stocks extended Monday's gains, with Apple and Broadcom up 1.1% and 2.4% respectively, while Nvidia rose 1.1% and Microsoft gained 2.2%. Amazon added 2.6%. Meta, Microsoft and Tesla report earnings on Wednesday, kicking off results from the so-called Magnificent Seven, which will test the AI trade that has underpinned Wall Street's rally for much of the past year. In total, 102 of the S&P 500 companies are set to post earnings results this week. Of the 64 that have reported as of Friday, 79.7% have topped analyst expectations. The Dow Jones index slid, pressured by a 19.6% drop in United Health after the Trump administration floated only a modest increase in Medicare insurer payment rates. The proposal clouded over the insurer's forecast for 2026 adjusted profit, which was above analyst expectations. Peers Humana and CVS fell 21.1% and 14.2% respectively, weighing on the S&P 500 healthcare sector, which slipped 1.7%. US Treasury yields were mixed on Tuesday as investors positioned ahead of the US Federal Reserve policy decision that is widely expected to leave interest rates unchanged on Wednesday. Treasuries hardly reacted to data showing an unexpected drop in US consumer confidence in January amid growing anxiety over high prices and a sluggish labour market. The Conference Board said its consumer confidence index plunged 9.7 points to 84.5 this month, the lowest level since May 2014. Economists had forecast the index at 90.9. CME Group's FedWatch tool showed more than a 97% chance the US Central Bank would leave its benchmark interest rate unchanged in the 3.5% to 3.75% range, unchanged from Monday. The US Treasury sold $70 billion worth of 5-year notes at a yield of 3.823% into tepid demand. The US 10-year Treasury yield rose by 2 points to 4.23%, and the US 2-year Treasury yield fell by 2 points to 3.57%. European share markets ended higher on Tuesday as investors reacted to the European Union's landmark trade deal with India. The agreement represents about 25% of global gross domestic product and about a third of global trade. The Pan-European Stock 600 and UK FTSE 100 indexes both rose 0.6%. Banks led sectoral gains with a 1.8% rise and hit their highest since May 2008, with HSBC up 2.8% as it briefly hit a $300 billion market value. Puma shares rose 9% and hit their highest level since last March, following a deal by Antis Sports Products to buy a 29% stake in the German company for 1.5 billion euros. The deal is expected to help Puma increase its sales in the lucrative Chinese market. In commodity markets, oil prices settled 3% higher on Tuesday, Wednesday as producers reeled from a winter storm that hobbled crude production and drove US Gulf Coast crude exports to zero over the weekend. The Brent crude price rose 3% to $67.57 a barrel, and the NYMEX crude price gained 2.9% to $62.39 a barrel. The Gulf futures price settled just 10 cents or less than 0.1% higher at $5,082.60 an ounce on Tuesday, after breaking through the $5,000 per ounce milestone for the first time in the previous session, as persistent economic and geopolitical uncertainty drove investors to the safe haven metal. Copper futures sank 2.6% as investors booked profits from the metal's recent rally. Iron ore futures, however, fell 0.1% to $106.03 a tonne, weighed down by lingering concerns over demand for the key steelmaking ingredient in top consumer China. Aussie shares are set to open higher on Wednesday, extending their rally from Tuesday ahead of key quarterly inflation data. According to the latest SPI futures, the ASX 200 index is expected to open the day 38 points or 0.4% higher, potentially rising for a fourth consecutive session, with local shares currently at 3-month highs. In Australia on Wednesday, the December quarter Consumer Price Index release will be closely watched given its importance for the near-term monetary policy outlook. Commonwealth Bank economists expect the policy-relevant trim mean CPI, which excludes volatile food and energy items, to have risen by a firm 0.9% in the quarter. On an annual basis, core inflation is expected to lift to 3.3% from 3% in the previous quarter. In our view, this release is likely to confirm that price pressures remain strong. We continue to expect the RBA to tighten monetary policy in 2026, with the most likely timing for the first cash rate hike being February 2026. Swaps now imply a nearly 60% chance of a 25 basis point rate hike at the cash rate next week. In local company news, Ampol, Boss Energy, Coronado Global Resources, Syrah Resources, West African Resources and Woodside Energy all issue quarterly updates on Wednesday. The US Federal Open Market Committee's policy announcement on Wednesday looms as the pivotal market-shaping event this week, as investors await US President Donald Trump's announcement of his first pick for the next FOMC chair. Fed policymakers remain deeply divided, with Trump nominees favouring rate cuts while a majority of others lean hawkish. Markets anticipate no change to the 3.5% to 3.75% federal funds target rate at the meeting. However, voting and accompanying the statement will be closely analysed, along with Chair Jerome Powell's news conference amid an unprecedented challenge to the Fed's independence. Wall Street expects Microsoft to report a 15.3% rise in second quarter revenue on Wednesday, benefiting from strong demand for its Azure cloud computing services from businesses. Meta Platforms is expected to report a 20% jump in fourth quarter revenue as its AI tools help draw more marketing spend in the holiday season, and Tesla is expected to report a 3.6% drop in fourth quarter revenue and a 2.8% fall in 2025 sales as sagging demand hurts deliveries. The US dollar slid toward its lowest level since February 2022 as signs of US support to boost the Japanese yen reinforced the argument about potential coordinated intervention to guide the greenback lower against key trading partners. The Aussie dollar has lifted from 69 US cents to 70.13 US cents and was near 70.05 US cents at the US close. The Aussie is trading near its highest level since February 2023. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.